Just going to record my bit and then. Right, cool. So this week for me was relatively slow. I was quite busy in the week, so I didn't manage to like kind of be at the charts all the time. But I did get a few trades. I didn't get as many as there was last week or the week before, which is fine. Again, like some weeks are like that, some weeks aren't. Just got to kind of roll with the punches. So my first one of the week was EU, which is on Monday. And this is like within London, just kind of before New York. And what I was expecting was for price to go higher, right? And this was based on the fact that we had a low, like all the way down there. Then we had this high, and then we had obviously a strong reaction, but this low here failed to break the low that's far down over there on the left, right? So I anticipated something like this was going to happen. And then I was targeting the M15 high, which was on the left. So that was my kind of framework for this. And we had like a reaction kind of like straight in to the POI that I had. And then basically price had a nice reaction. Okay, so we had this low and this high, and me with my stop loss management, basically, like it says here, if this breaks, move stop loss to the blue low. And that's because we would have had low, high, low, and then my completed range, right? So once we have that range, then I'll move my stop there. Same stuff as I was kind of talking about last week, is that because we can have something potentially like this before going higher. And if we get a break of that, and also then a break of this, then this is more than likely going to tumble a lot lower, right? Past my stop loss, past everything else. And also as well, obviously, if this breaks and we do get a break of this, then that also is order flow disruption. And then that just kind of, it doesn't invalidate the trade necessarily. I'd say this is more the invalidation, but this is a kind of key point. If, you know, if this does actually come up and break, then we're probably going to see something along these lines. So that was kind of my thought process there. And then it broke, so I moved my stops to this point here. It's about 0.002%. So obviously nothing crazy there. And yeah, it's basically risk-free, right? So that was that. And then we failed to break this high over here, right? We had this internal transition here, the order flow disruption, and then kind of like straight after that, we came below this low here, right? And why that low, obviously, as well, we've got this high to this low. Again, that's why my stop was there too. So it's just, it was a very valid invalidation point, if you like, on that sense. And what happened after was it fell to where the original stop was. Sorry, it wasn't there. I think it was here. Yeah, over there, right? So based on that kind of like micromanagement, it stopped me from losing 1%. And I was also aware of the fact as well, we did have a kind of sharp drop after breaking a high over here. So technically this could have been, you know, a new range forming potentially. But again, the bias was bullish. So I did want to trade that continuation. And this had, in my opinion, more probability of winning than if I was trying to sell, say, I don't know, on this candle before coming lower. Just makes more sense to me, right? So yeah, that was that. Now, I was trying to get a sell in here, but we failed to reach this point because once this invalidation broke, I was pretty much certain that this was going to fall, and I was going to target here instead of here. And price just, I think we went up one more, and then we missed, and then it just fell down to here. And then I think I can't remember if it carried on going higher after, but based on EU's like performance this week, obviously it's been trading up high. So I don't think we did actually take this low out. So the bias overall was still correct. It's just the entry here was kind of on a micro sense wasn't correct. And we did come down, we took this liquidity and then we push higher. But I know some people actually got in on this inefficiency here, which potentially would have been a better option because you're kind of accounting for this whole entry here rather than just this point, but I do think that my entry point there is good, and you know, it's not like I was targeting this candle here, so it wasn't I don't think it was a mistake on my end. It's just one of those instances where price just fails to hit your POI, and that was just a shame. Maybe on some other brokers it might have come up a bit higher and hit the bottom of this wick, but again, can't win them all, and I'm glad I came out with this based on the risk management that I did without any losses. And here, like, just based on that kind of point here, right, you could potentially say, all right, well, is there a, you know, going to be a buy opportunity here? And basically, if I wanted, if I was going to see a buy opportunity potentially present, I would have wanted this high here to break before then potentially going higher. So we would have seen a potential transition within there before price did go up, but we didn't have that. And again, it just supports that bias. And as you can see here, it did fall and it took out those lows that I was talking about on the left over there. These ones over here, right? So first break even, I guess, if you like, of the week. First, give me 2 seconds, sorry. Hold on. Well, on this call, Bitcoin has just made all-time highs, by the way. It's trading above 69 now. So go check that if you want afterwards. Right, and obviously here, GU kind of had like the same thing as EU did here, but with the break. And based on that, we had that move up into the high over here. So it's just obviously being patient and making sure that everything actually follows through. You know, if you entered a buy here because you saw this low break and then, you know, we're coming close to breaking this high, making a prediction of prices going to break that and then buying off of that, you're setting yourself up for a loss, right? So wait for that confirmation. And I'm annoyed that I didn't see this. And, you know, I think this was a good trade if there was something within here potentially. Stops below the invalidation. That's a decent trade. See here being 3.5 pip stop, just say you bought within the discount, and then obviously your 10.5 TP. So that's about a 1 to 2.5 roughly. Right. Any questions on that? Or are you all clear? Cool. I'll take the silence as a no. Sweet, sweet. Right. So this was the first winning trade of the week. We had GU, and it was trading higher, and basically this low, pretty sure, was taken, and then we had a basically just a continuous price move up. Right now, I had a few people, I had 2 people messaging me this actually, Isabel being one of them, and another person being from outside the group. I don't think Isabel's in here today, no. But the question was, or the kind of rebuttal, if you like, was, why am I buying so high, right? And it's a good question. And a lot of the time, right, and I've mentioned this in a couple Zooms before, but when price is coming to the latter part of London, right? So you see here, it's like 3 kind of coming into 4, 5. Basically what I anticipate is that price is going to take the local point of liquidity, right? The targets are basically always going to be hit, or near enough all the time going to be hit by 4 or 5 p.m. London time, which is in New York time, it will be 11 a.m. or 12 p.m. right? So I was confident that price isn't just going to continue trading back down for the rest of the session. I think based on this continuation and the way it's moving, see order flows clearly strong, printing clear new highs. So I anticipated that based on that, we are going to see that higher get taken. Now, the actual, well, I had 2 entries on this, right? I had an entry here, then I had an entry here. Okay, and hold on, let's go back. The entry is obviously based on this candle here, and this low was taken very subtly on this broker, and I just basically anticipated that this POI was good and we were going to hit the kind of less significant major high, which was on the left, obviously over there on the M15. So it wasn't obviously crazy far away. It wasn't like on the daily or anything. It was just a bunch of equal highs that were sitting there, and the equal highs looked something like this on GU. It was like all of that, and it was like one of these highs over here. And then this was like the high over there. And me being me, I like to target the kind of like the lower end, because even like this week we had, I'll show you the example in a minute after I go through these charts, but basically we always can see something like these highs being taken before price goes lower, instead of taking that high, right? And it's just one of those annoying instances that occur. And that's why this high was better, right? Either way, this was a 1 to 6, which is amazing. This is a 1 to 3.32, which is also amazing. And same thing going on here. Low, high, low, high made. Stop then gets to move to there, because what can happen is, again, same thing. We can come down and it's get something like this. CBOS, break, going higher, right? That breaks. And then obviously our stops are at BE pretty much. So, you know, this can either just carry on going higher, or if we see some form of move down like this, then we can move our stops to here. And if this breaks, moves the stops to orange. And then it did. We had low, high, right? Stops then go here. And then straight after we had a bit more of a run up, and that's at 0.60, which I think was literally about 3 pips away. So hold on, 0.60. Yeah, so about, yeah, it was 3.5 pips away. But I was, again, like I said, I was using this end of session time for price to come and hit this, but it just seemed like we broke all the other highs apart from this high. So again, it happens, and that's why I just like to be conservative with that, and I'm glad I had 2 entries on that. That was a good win, but this closed out 1.58. It was about 1.5 roughly. You know, take into account spread and everything. But yeah, that was that. And I'm not sure, but I think this carried on going a bit lower, and then next day it traded higher off the top of my head. But yeah, pretty straightforward again, I think. No questions on that. If any questions, if not, I will move on. Let's give you all 30 seconds. Cool. All good. Right. Sweet. So this was GU. Now this was a really annoying situation, right? Because I mistakenly placed my stop loss at the wrong place, and I actually ended up getting stopped out and missing the actual win. Now, granted, it was very choppy, but again, we saw this same kind of pattern over here. We had the low break, the high break, then we had the unwillingness here, and then the break was here, right? So we had this range here to here, had the internal POI, which is there, stop being below this invalidation, just to be sure, right? Now, this stop is valid, 110% valid, in my opinion, right? And the mistake that I made was I said that when when orange happens, then I need to move my stop here, but I should have put it there, because what ended up happening is I did do that. And if we had this, then I could have moved it over to here. But what ended up happening is I moved it there instead of here. And I lost, again, a very tiny amount, but it's not the loss that matters. It's more the fact that I'd missed out on this whole move here, right? As you can see, the unwillingness low was never taken. And obviously that's stop plus spread, so don't worry about spread. You should never worry about spread taking your stop unless there's like a crazy NFP that we had today. If you're adding your spread to your stop, then you should be fine, right? But as you can see, the invalidation held, right? And until we broke the high, which is this one, we held it, right? And when did this high break? It's too choppy to even see, to be honest. But yeah, that was basically my blunder. My stop was here, and it should have been there. And as you can see, this is the 2 minute, this is the 1 minute. That low is there. That's a silly mistake on my end. But again, you can kind of see through the choppiness, right? We've got high, low, fucking hell. Low, high, see LG, continued higher, and it just carried on, right? So through that choppiness, we had, see the push higher there. But yeah, again, that whole kind of bias was valid. Just don't make that silly mistake that I made. And it's something so minuscule as well. It's not like you'd even think, oh, you know, this would be, it's not like you'd think that this would be, you know, any different from that, maybe because it's like a pip or 2 pips difference, but it actually is in the grand scheme of things. And that's why I think obviously just placing your stops at these type of places is so important. Is that because the unwillingness low is the true bullish invalidation? Are you saying I should have put it there because it's the true invalidation of this thing? At LG here, once that was broken, that was that. And then we had our, you can see we had our completed range, and I need to put it at the bottom of the completed range rather than just at this low here, because what we can have is the CBOS before price goes higher, right? It's just like the same thing as like the previous ones. And I just didn't see it. It's just very irritating that I didn't see it, but you know, like I say, you got to roll with the punches sometimes, and that was just a silly mistake. But yeah, anyway, cool. I think that's pretty clear. Right, cool. Done. Right, yeah, this one was good. I demoed this one because I didn't want to take this live, but basically I needed this to break, right? And obviously, Eddie, you asked, like, you know, why is this OFD? Obviously, we have the POI here, price then reacts, failed to react, so it failed to follow through, and then we get a break, right? Well, we're waiting for a break, hence why it says pending. Now, see, don't mistake that for OFD because we had no reaction off of that POI, but I didn't want to enter this until we saw that break. And what happened was, as you can see, without me confusing you, we had obviously a pull down into there, and you could argue that, you know, that POI was hit, but just here in general, I would not have entered because this POI technically is still intact, and we can always come back up to mitigate. It's always a potential before then following through. And I didn't want to run that risk. And again, the bias was formed based on this transition here, right? And this high was never taken, but once it was, you've got that, and then obviously your trade within here. Okay, a very conservative stop would have been at the low. But I was aware of the risk here, and we had this micro LG BOS internal or POI within this range, and that was the entry that was taken. But it was very risky, in my opinion, because we had obviously, this isn't, you can't class that as a true break of structure. But based on this, that was kind of what was leading my bias. And then obviously that as well. And then this too. So yeah, no live money on this, no real wins, but can't complain. Still good. Right. Yeah, so this was EU and right, let me pull up my charts. So I just wanted to talk about that one. Give me 2 seconds. Cool. Can you see my screen? The chart.
Yep.
Cool. Right, so that EU. So originally there was actually I saw a short here, but I wasn't documenting it at the time. All right, hold on, sorry. Let's just get this together. See, now obviously, externally, EU is bullish, right, as you can see here. But of course, there always comes a time where you need a pullback, and where that pullback is going to end, you can have certain criteria to that. But there was basically these lows here. And the thing that I was talking to you about earlier, about targeting the kind of like when you have your equal highs, I always target this. Same with equal lows. So we've got these here. I do just like to target this low. And I was just kind of like running a little sell drill, if you like. And this just proved to me that, that's a kind of good strategy that I have. And the sell was basically, see, as you can see here, it's obviously externally bearish. We had big push down, push up, push down, new range created. So our range is here to here. And then we have this LG reaction. And I didn't take this. Like I said, it was a drill and the sell was there. The short was at the POI. Stops was at the top of the LG. And the TP was at this point here. Ideally, I like 1 to 2s in a trade or more, but I think that was quite a clean trade. And as soon as that occurred, we had that transition. And I know Fredo was you were waiting for something down here on the seconds, I'm pretty sure. I didn't see that. I don't have the seconds, and then you got into this, I think. Could be wrong. Your stops below there. But yeah, and then I saw this occur. I saw that break. Then I saw price come back up higher. So I thought, okay, I'm going to run this entry there. Again, I didn't take this one. These are all drills. And then the TP was there. And basically, price had made the low, made the high, took out this low, mitigated a bit further in the POI, but this stop still stood. And then kind of straight after, we had this very micro transition here, mitigation of that POI, and then bang. So that was pretty clean, I think. But yeah, like I said, I was just demoing. Well, I didn't even take this on a demo. I was just watching it go by. But yeah, that was that. Quite simple. I think like there were like the moves that occurred in this week, I think were quite nice, but I just struggle. I feel like I struggled this week to just find good moves. Like even here, like here just looks crazy choppy. Kind of glad I wasn't kind of like touching it there, but yeah, I mean, it happens. Some weeks are good, some weeks are bad, some weeks are mid. Can't win them all. Yeah, I had GU here, and funny enough, I was waiting for. God's sake. I was waiting for this, and then we had price come down, and I was obviously waiting for that low to get taken and then see a move up. So 1 to 2.5, but we didn't do that. And then kind of pre-NFP, we rose, and then NFP happened and we did hit the entry, and the stop did still stand, and then that just ran crazy. So that's quite cool to see that it kind of worked. And we technically got low, high, low, high, and then run, claiming that stop's valid technically, right? So yeah, that was that. See, just to let you guys know, as I did already, BTC has had its ATH, so you can see there. Oh, did we tap? No way. We tapped 70. Oh no, nearly. I had an entry just placed there at 70,000 because I was anticipating that sell to happen, but it didn't. But yeah, that's pretty cool, guys. History was made today, just to let you know. But yeah, that's me done. I've got another call which I'm late to, but if you guys have any questions about anything that I went through, then obviously just feel free to hit me up. I'm going to pass it over to Fredo, and yeah, that's it from me, guys. Thank you.
Can everybody hear me? All right, give me 1 second. Let me just organize really quick. But how's everybody doing? Everybody's doing all right? We had a couple of people hop in while Alex was presenting, so welcome. And we have, let's see, we have a couple of admins in. Yeah, I see. But yeah, overall, I would say a bit of a slow week. How do I put this? Tuesday was not really the best day. I didn't trade. Honestly, I didn't really do anything. I'll come back as to why. But yeah, I only really traded yesterday and had 2 wins, 1 loss, and we can just go ahead and review that. But let me just really quick. Okay. Oh, we're good to go. But yeah, like I said, 3 trades this week, 2 wins, 1 loss. And we can go ahead and get started. Right, so like I said, I only traded Thursday. Wednesday I didn't see anything, and Tuesday was kind of just one of those days. I don't know if you guys ever have a day where you're kind of either if you're either at work or you're trading or you're just doing something, some type of work that you would consider to be something that's progressing you into the future. Whereas for me, in my case, it would be RCV trading and any external projects that I have going on. And I was kind of just looking at my screen, and I'm just like, yo, what am I doing? Like what? Why am I on here? What am I doing? Like, I just felt completely blank. And I get these days, maybe honestly, maybe no more than once a quarter, very rarely. I don't know if you guys have ever had those days where you're kind of just sitting there, just like, what the fuck am I doing? I don't know, maybe yes, no. I don't know how you guys feel about that, but it was just one of those days for me where I just didn't really feel like doing anything, and it's just kind of just got my stuff up. I organized my notes, organized my to-do, see if there's anything that I had to do today and anything that I didn't have to do today. I kind of just left it for Wednesday, and Wednesday I caught up, but I just went ahead, got up, went to the gym, felt completely better. And then kind of just chilled for the rest of the day. Had like a bit of a regroup day. So I don't know if you guys ever feel any or have types of days like that. So that was my reasoning for not looking at anything on Tuesday. Wednesday, I was catching up on everything. Didn't really, was looking at charts, but wasn't focused on charts. So didn't really find any scenarios. Although I think I reviewed later that day, and there was maybe 1 or 2 opportunities. But Thursday was my main trading day, and on, like I said, on Thursday, I had 3 trades. I bought EU, AU, and GU. I'm kind of 50-50 still on on adding GU to the trade list, but honestly, I kind of like how it moves, so I'm not opposed to keeping that on the watch list. And as long as I'm 100% focused, I don't mind adding another pair. Your issues, long hours at work, and then catching up again with trading. Yeah, I would say that's more of like a bandwidth thing. Like, I think a lot of people don't. I don't want to say understand. I want to say acknowledge. Why not trade AU? Yeah, AU, EU, and GU. But yeah, I would say that's more of a bandwidth thing. Like, for example, we have 24 hours in a day, right? Let's say we sleep for 8. That's 16. We go to work for 8. You obviously have to eat, go from A to B, and then B to A if you're driving to work or something, and that kills a couple of hours as well. So when we really fall down to it, we're technically up and active for 16 hours, but that doesn't mean we can focus for 16 hours. You know what I mean? So for the most part, I think I read some book on deep work before, and for the most part, we have about 4 hours of 100% deep work, and after those 4 hours, the standard kind of begins to drop. So yeah, I completely understand what you mean when long hours at work and then you're trying to come back into trading. Yeah, it's definitely hard, bro. Definitely very, very hard. I mean, when I don't have time to trade London or New York, AUDUSD. So yeah, I would say trading. You mean trading like the Asia sessions? Is that what you mean? Yeah, I would say it's decent for scalping. I will say, like, honestly, even though you'll get maybe 7, 8, 12 pip moves, they could still give you some decent R. It's just not something I've really looked into, but let's go ahead and get into the breakdown. So first trade was my EU scenario. Let me see. This was on, let's see, yesterday. Yep. So here we go. The before, essentially what I was looking for at first, right? I sent you guys this chart in the chat around this time, around 8 a.m. CST yesterday, where there was an internal order flow disruption, but it did not come back into my final sell to buy move. And I kind of missed that initial entry. Whereas if I would have caught this entry, it would have been actually an incredible R based on the target that I was looking for. I would say easily like a 1 to 8, 1 to 9, which is very rare in my opinion. Whenever I'm trying to be conservative and trying to follow the models and also trying to follow trend continuations. So you don't really see those come up too often. But in reality, I believe price came into a 3-minute POI. I don't fully recall, but it was like a 3-minute inefficiency fill here, and we filled, and then we continued higher. Kind of missed the returning back to the OFD zone. And once this high broke, I was no longer interested in that immediate sequence there, mainly because I know that if we were to then come up here and then come into here, we would need some type of bullish transition in order to justify any type of bullish move, because on the 30-second, this low is actually a solidified low. So we would be breaking structure and we would more so be favoring, right, the bearish bias, right? So my trade was from the inefficiency fill and my SL was below the quote unquote the 30-second inefficiency fill. I mean the 30-second solidified point. I think I might have had a chart on it. No, I did not. But yeah, either way, we filled the inefficiency. We held price into the upside. And I didn't move my SL until after this was taken. Once this is taken, this is my new invalidation. Why? Because this is the last solidified point, creating a new high, and my risk is now relatively close to break even. And then from here, it's just kind of trying to be very conservative with the management. Like I said, I'm pretty much at a break even point, and I'm aiming for the previous external high, which you will see in the next chart. But from here, I kind of just wanted to wait for CBOS continuations. You guys know when a CBOS continuation occurs, I kind of move my stop loss, which is here, right? CBOS continuation, new SL, CBOS continuation, which means we break out through here. Then this is my new SL, which is already about a 1, close to 1 to 2 RR in profit. And this total was a 1 to 4, I believe, risk to reward. And we targeted the previous external high because we are looking for continuations. As you can see, I was looking for, right, the previous external continuation. We came into an H1 POI. The H1 POI gave us the reaction, and then I got my trade into the upside. And if you can see this red line, there was actually a 30-minute inefficiency fill. And I don't know if you guys saw the new breakdown, but in the breakdown, I also mentioned why it made more sense for me to take TP here and not potentially hold longer, because this could have easily been a 1 to 7, 1 to 8. But like I tell you guys, if I'm looking for an external target or an external of the external, where this, let's say, is the minor intraday, and if I'm looking for a major intraday trade, which the high was relatively around here, then any position I'm taking, it would have to be from the major intraday perimeter, where instead of having the scalp / micro entry, the only thing that would change, I would probably still take the same scenario, and this is the final sell to buy move, but I would need to put my invalidation at the low of the sell to buy move, right? Because there are cases where, the scalp continuation will break even before we get the major intraday movement to the upside. So if I know that I'm a scalper, then I'm looking for scalp targets and I'm setting scalp invalidations. But if I'm looking for, like I said, the external high over here, I would need to put my SL at the low, and my target would be relatively around over here, which in effect is actually a smaller risk to reward than my scalp entry, which is why I prefer the scalp entry, because for me, I feel like I can apply the models better in a scalp sense. That does not mean this is what you should do. Let me make that 100% clear. But I can be in and out within the session, and I'm kind of just done with the day by around 11, 12, right? Because this trade only lasted till 9 a.m. You know what I mean? So I'd pretty much be in and out, and I'm done for the day. And next trade was my GU trade, and this is actually an example where I showed you all where, or what, pretty much proving the point that I just gave about a scalp entry hitting break even before giving the major intraday move. And here, right, my entire move was, I know that we are externally bullish, right? I know that liquidity has been swept here. You can see relative equal lows, a previous mitigation sequence. That liquidity has been taken, and we have been given an LG continuation. Once we have been given the LG continuation, then we have choppy price action. Not much I can do here. But after the LGC, I know that my invalidation to the LGC is here from the external POV, which based on M1, this would be my major intraday, my minor intraday, sorry. My scalp legs are every leg in between. And when I'm looking for a type of scenario, I need my type of confirmation, and I understood here that we had a potential sweep. The potential sweep came in and it gave us high momentum into the downside, but we were unable to break the low. So we mitigated a previous candle. This previous candle gave us the reaction, gave us a confirmed mitigation, right? And I actually acknowledged this internally as a potential SD. And what do I say SD? Because we have the wick low that is broken through, which could be considered the continuation to the downside, and it's broken to the upside, causing a type of SD into the upside. So once I see that be taken out, then I took my trade based on the POI present, and I'm looking for the continuation to the upside, right? And this is, I believe, like a 1 to 2.5 risk to reward. And the result was I got some drawdown, but this is why we specifically set stop losses at invalidation points. And why did I set my invalidation here? Because like I said in the breakdown as well, we have a mitigation in place, right? And for this to completely give us a reverse in trend, or a reversal in trend, then we need a POI and we need the reaction. So what is the final leg coming into the upside? That is low into high, right? We come low into high. Therefore, in order for this to give us the complete reaction, then we have to break the slow. So therefore, if we are to break the slow, then I can then favor the bearish sense, right? Because this would then lead to potential unwillingness, because obviously we have low, high, retracement, potential unwillingness that would be confirmed here, and then we can favor the downside. Okay, so due to that, my invalidation held, and fortunately I was able to hit TP. And I believe in the next chart, yep, as you can see, I believe Alex showed you guys this trade. He actually caught a pretty good buy scenario here. It's not a trade I would have taken, because let's say I was looking for the very, very big a trade and by that I mean a minor major intraday trade. Then no matter what execution I take, my invalidation has to be here, right? And if I'm looking at this from the minor / major intraday sense, then I'm looking at low into high, and I'm looking at low into high, which took liquidity. So what high took this liquidity? I mean, what low took out that liquidity? Here, right? So even though this is solidified CBOS, this would be the invalidation, right? If we're looking at the overall continuation to the upside. But because I'm only looking at the scalp and I'm only looking to take TP at the scalp, then I can justify the internal management here. So for example, let's say we have my trade scenario, right? I now see that we have a potential LG into the upside. So my invalidation is here. And then from here, we have a CBOS continuation. CBOS continuation, right? In other words, an LGC, right, inside of here, because we have solidified the low and this low did not break the previous. So this is a liquidity grab continuation with the potential of looking for this target. So my invalidation is now here, and then that target is now met, right? But that is only from the scalp sense. If I'm looking at the external view, then I have to only acknowledge the external structural points, right? So depending on the type of trade that you're looking for, will show you what type of perimeters you should use. If you're looking for the scalp, use scalp perimeters. If you're looking for minor and major intraday, then you have to look at minor and major intraday perimeters, because a lot of times I'll see people get stuck trying to use scalp perimeters on major intraday trades. And if you do that, then you're more than likely going to get burned, or you're going to get stopped out too early. So if that's the case as well, if I'm looking for a minor major intraday trade, then I have no reason to be on M1. Zero reason to be on M1. Okay, so that's that. And yep, as you can see here, this continued higher, and just kind of trying to show you guys the point before this, we have a LG continuation, invalidation is here. So depending on where you take your trade, let's say you even take it here, right? And we're looking for, let's say, a target, which is an external high, because there was external highs on GU, I believe. Excuse me. Once we are taking this trade scenario, once we have this low into this high, then this is my invalidation. All right, and then once we come into the pullback and take out the high, this is my invalidation. All right, and then once we have a CBOS continuation, okay, now I can move my SL here. All right, so you have to be very conservative based on the type of trader that you are. All right, and final trade. Oh, this is not it. Here we go. Did I not post the correct one? Give me 1 second. Oh, I did not. I messed up. Oh, sorry guys. I actually posted the wrong image here. This was a EU, but my AU trade, I was actually around here when I took the screenshot. But my entry here was a bit aggressive, where I was looking for a potential LGC to the upside, which would then give me the reaction that I wanted into the upside, but I did not get that. And in reality, what had happened here was I am looking at, right, a potential bullish continuation. I see a point of reference. I have a low into a high. That high is solidified here. And then we have the pullback, which is solidified here. So once the pullback is given and then broken through, that is SD, right? And I should not be buying here unless this high is to break. Right, so unfortunately, just the timing was wrong on this one, and the SD came back for a mitigation, and it gave the target before then giving the full move. Right, so the timing was just wrong on this one, as you can see here. Ended up going straight to TP. But unfortunately, there was just no real trade, at least as of now. The only real trade that would have made sense, right, obviously this is all bearish, so we would have needed some type of conversion. I see that this is broken, so we have an LG into the upside, and the only perimeter that makes sense is here. We have one mitigation, two mitigation, and then this would be like a 1 to 2, 1 to 3. Well, what is SD, bro? What is SD? No, I don't mean what the acronym is. I mean, what is the definition? What is SD? Wouldn't that be considered a spring? I don't care about that, bro. I'm not gonna do that. The problem. The problem with this, bro. The problem here with this stuff. Perfect, right here. What do you guys think is the problem with attempting to trade a schematic? No, an SD is a failed structural continuation. A failed structural continuation. But this is actually a bit misleading. Let me fix this up for you all. There we go. So we have our low into our high. We have our pullback. We have solidification of the pullback. That is then taken out. And then we have a potential reversal to the downside. All right, potential reversal, right? Obviously, we don't know what can happen after liquidity has been taken. After liquidity has been taken, this could then convert back into the upside, and it could just be an external CBOS. But it's a failed conversion. So I don't know where the confusion is here. Low, high, retracement, solidification, break, structural disruption, and then you have the mitigation coming into the target. Structural disruption. But anyways, back to the other question. What is wrong with this? What is wrong with this? This is a bit of a tough question. What is wrong with trying to trade these schematics? It's only one thing that's wrong. And if somebody gets this, I'll actually be a bit impressed. That's how I've been feeling lately. Those 1 to 50s are no longer there because of the evolution of my trading style. Yes, exactly. 100%. 100%. But can anybody tell me what is wrong with trying to trade these schematics? And I say wrong very loosely. I say less probable. No. The problem is not the schematic itself. Because look, this is a reaccumulation schematic. All right, a failed bullish to bearish transition. right? We attempted to go bearish, we failed, and we continued higher. The problem isn't the schematic. What is the problem with this stuff? What is the problem? Okay, like 1 more minute. If somebody can figure this out, I will be impressed. Anybody, I want at least 1 more answer. I want somebody to give me 1 answer. No silly answers here because it is a tough question. So I'm actually open to hearing what you guys have to say about this. Nope. But the principle is the same. Yes. The problem, you guys are looking at this at the wrong way. This is not the problem. This is fine. This is the problem. What is the problem with trying to trade a schematic? This is the problem. The definitions, they're too broad. They're very hard to apply. It's just, for example, the selling climax, the point at which widening spread and selling pressure usually climaxes. That is not a applicable definition. It's like saying my invalidation point is where my trade invalidates, where the trade has exhausted and it invalidates. That does not make sense, right? Or it does make sense, but it's not an applicable definition. Whereas if I was to say my invalidation is the previous external point of, or the previous external solidified point of the trading range that I am trading, that makes a lot more sense. That is a lot more applicable than the original definition I just gave you. So these definitions, they make sense, right, to an extent, but when it comes to application, they're way too broad. Way too broad to state these in a consistent manner just from my POV. The only part about any of these schematics that makes a lot of sense is the selling climax in terms of a volume POV, but they don't mention this here. It's pretty much where we have the selling climax, we have a big bearish point of volume, we continue lower, and the volume is diminishing because that creates a type of divergence, right? And that makes sense in terms of looking for a schematic. But when you're trying to apply these, it doesn't make sense. You're going to give yourself a headache. You're going to give yourself a headache. And you're going to find yourself trying to force to put ST maybe under some specific low. Like, for example, let's go to this reaccumulation scheme here, right? And if we were to pull up, tell me, does this look like this? Yes or no? And I mean, in terms of a detailed approach. In general view, yes. But detailed wise, does this look the same as this? Yes or no? Yes, really, yes. Where do you see in that schematic that liquidity is swept? Where do you see that? Here. Where is liquidity swept on this image? So why exactly? So why are we trying to force a schematic or trying to force, right, these terms onto a chart when we already use the general idea of schematics using the concepts that we're already using today, right? Because we understand, right, that the market moves essentially based on supply and demand, buyers and sellers to an extent. And then obviously there's algos in between there, but I don't want to get too much into that. But the point is, a supply and demand approach, we trade transitions based on trading ranges. This is a trading range. Why do we prefer trading ranges? Because this is where transitions occur, whether it's a bullish to bearish, a bearish to bullish, a bullish to bullish, or a bearish to bearish. right? But I don't need to include all of this extra stuff, because I would be forcing myself to stay, oh, maybe this is a spring, like you said, which it's not. This is not a schematic at all. But I would be forcing myself as a spring here, and then you don't want to see, right, a scenario where maybe you're buying way too high, and then you see this, you interpret this as a spring, and then this breaks structure here, and then it becomes a bearish sense, right? That's why we trade based on mitigations, we trade based on models, and we trade based on internal structure, not based on pre-supply, selling climaxes, secondary tests, etc., 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 right? Because, and we can also include the volume argument, where obviously every liquidity feed is giving you different pricing, therefore you get different volume. So even if the numbers are off, the proportions may still be relatively the same, but that also makes it less probable to rely on that type of resource if it's not consistent. Right? So that's the little rant there. I don't, honestly, if you're going to try to force schematics, you're wasting your time. You're wasting your time. There's no reason to. The only thing you should focus on is it? The only thing you should even focus on if you're looking into this stuff, where is it? Where is it? Right here. Is just understanding that transitions are in play, and now whether it's from bearish to bullish, or bullish to bullish, or bullish to bearish, or bearish to bearish, is dependent on the internal structure, the internal order flow, the internal mitigations, the internal models. That's just how you should be looking at it. Screw everything else. It's too broad. All right, does that make sense? People just label it but don't understand it. Exactly. But I mean, that isn't the problem, though. The problem is the definitions. If the definitions are too broad, people are going to have different understandings of it. If you add specificity to your definitions, then you're able to relatively see the same thing. That's why in the group you see people take relatively the same types of trades, because the definitions are specific to an extent. All right, does that make sense? Oh, does that make sense, everybody? Cool. So that was that. This was my last trade of the week. This is a loss, but unfortunately just got the timing wrong. But yeah, with that being said, oh, this actually did start climbing down. I was just kind of looking at this. Obviously there is the continuation. This is bullish. So I would need a bearish transition. So we see here that the low is transitioning into a bullish sense. Then we have the bearish LG. We take liquidity. We then have an order flow plus break of structures. So this would be the bearish trade. And it looks like we're probably aiming for here. But yeah, other than that, that kind of concludes my my Zoom for today. Does anybody have any questions, concerns, anything they want to go through? Can you add the drawing? What are you talking about? Okay, better. You show me what you see. Yep, show me what you see. Okay, what is that? what kind of BOS? Feel free to unmute your mic. I'm sure you can unmute your mic.
Okay, so was that the liquidity gap break of structure from the high?
No. So, okay. Here, CBOS, low, confirmed high, CBOS. That means this is the retracement, meaning we're still bullish.
Okay.
Okay. So what's next?
In continuation?
No,
from
in
the low?
terms of where. I mean, you're asking me to say the sell scenario again, right?
Yeah, because you drew this as a BOS. So I just found that interesting because would it not be this?
Low, high, CBOS, low, solidification, pullback. I mean, the pullback has been solidified. So once this low is taken, then I have a reason to believe that this is internal unwillingness into the upside. It means that we're hesitating to continue higher. But that does not mean that I'm selling, let's say here, right? Because this is still a high risk sell. So I would need more confirmation. That confirmation comes from a solidified point internally here. We have a low that came into the high of the POI. So once that is broken, then I have a solidified high breaking a solidified low. So this is more of a reason to risk here.
Okay.
Yeah, because a lot of time, if you wait for the entire thing, then you're not going to get the pullback. You know, you're not going to always get the move. Yeah. So like, as you see, this would have been the final buy to sell move and it didn't reach.
Okay, thank you.
Cool. Any more questions, anybody? Cool. Can we wrap it up here, guys? No more questions, no more concerns? No, don't study Wyckoff cycles. Study the course material. Study what's on the website. It's given to you for a reason. Yeah, you see it. Bullish internal structure because we're in externally bullish. High is broken, high is broken, high is broken. Lows, lows, lows. Low is broken. Don't know if this is, it's still within potential mitigation zone. That break structure. There's a sell there. And I would probably sell this into the POI because we haven't touched the POI yet. Sure, but don't study Wyckoff's. No, man. Just look. Everything that everybody knows in the group has come from one source. That is the website. That is the Zooms. That is the journal reviews. If you don't do any of those, then good luck, man. Bottom line, just good luck. And if there's still more questions, just DM me and I'll get back to you when I can. But other than that, we can just wrap it up here, guys. I hope you guys have a great weekend and I will see you all next week.